From Stockholm, this is the Northern Economy perspective, insights, clarity, the Nordic way. Hello, and welcome to the Northern Perspective. I'm Nora Lindholm, your correspondent from Stockholm, bringing you a closer look at the transformations shaping the Nordic economies. Today, we turn our attention to Denmark, where a major consolidation is about to reshape the country's financial landscape, a merger that signals both the pressures and the promise of modern Nordic banking. At the end of October 2025, three well-established Danish banks, Sydbank A, Arbejdernes Landsbank, and Vestjysk Bank, announced their intention to merge under a new name, Sydbank A. Once approved, this union will form one of Denmark's 5 largest financial institutions, combining assets, customers, and decades of regional experience. The boards of all 3 banks have already given unanimous support, and shareholders are scheduled to vote in early December. If confirmed, the new bank will officially come into existence by the end of the year. Arbejdernes Landsbank, often called the Bank of the Danish Labour Movement, has a long history rooted in Copenhagen and deep ties to Denmark's trade unions. Founded in 1919, it has remained one of the country's most trusted retail banks, holding assets of around 108 billion Danish kroner and generating 4 billion in revenue in 2022. Its workforce numbers more than 1,300 employees. Arbejdernes Landsbank is also the majority owner of Vestjysk Bank, giving it a particularly strong foothold in Western Jutland. Sydbank, founded in Arbejdernes in 1970, will serve as the continuing institution and legal framework for the new Sydbank A. With assets of 179 billion kroner, Sydbank is Denmark's 3rd largest bank and operates over 50 branches across the country, plus 3 offices in northern Germany. Its history is one of steady expansion through mergers and acquisitions, having previously absorbed institutions like Tønderbank, DIBA, and Alm, Brand Bank. The combination of Sydbank's corporate banking strength and Arbejdernes Landsbank's retail network creates a broad and complementary base across Denmark. The new bank will remain headquartered in Arbejdernes, continuing Sydbank's registration and legal structure. Together, the merged entity will command roughly 137 billion kroner in loans, about 207 billion in deposits, and a total credit volume near 375 billion kroner. The ownership distribution will give Sydbank shareholders a majority stake of just over 57%, with Arbejdernes Landsbank holding 39% and the remaining shares owned by Vestjysk Bank's minority investors. Leadership will rest with Mark Luscombe as Chief Executive Officer, supported by Frank Mortensen as Deputy CEO, and Peter Hupfeld from Vestjysk Bank joining the executive management. The supervisory board will be chaired by Ellen Train Nørby, with Claus Jensen as her deputy. Behind the merger lies a clear strategic logic, resilience through scale. Like much of Europe, Denmark's banking sector faces increasing regulatory demands, intensifying competition, and the accelerating pace of digitalization. Mid-sized institutions are under pressure to modernize their infrastructure and deliver more efficient services. By pooling their resources, Sydbank expects to realize annual cost synergies of around 1.2 billion Danish kroner before taxes, fully achieved within 2 years. Most of these savings will come from integrating IT systems, reducing overlap in administrative functions, and optimizing the branch network. The banks also project a reduction in risk-weighted assets of between 12 and 18 billion kroner within 3 years, strengthening capital efficiency and financial flexibility. For customers, the transition is designed to be as seamless as possible. All existing accounts, products, and conditions will remain unchanged until the merger is fully completed. Stability, the banks insist, remains their top priority. Still, data from early 2025 shows that customer satisfaction varies sharply between the merging institutions. Arbejdernes Landsbank ranked first among Danish banks, while Sydbank found itself at the bottom of the list. Aligning these contrasting reputations will require sensitivity and a strong cultural integration plan. For employees, the picture is more uncertain. While the leadership emphasizes the need for skilled and motivated people to drive the new bank forward, cost savings of this scale inevitably point to reductions in staff, particularly in IT, administration, and branch management. No official figures have been disclosed, but job shifts and reassignments are expected as operations are streamlined through 2026. Legally, the merger will proceed as what Danish corporate law calls an unigentliche fusion, meaning a merger without liquidation. Arbejdernes Landsbank and Vestjysk Bank will dissolve directly into the continuing Sydbank structure. On November 5th, the three banks released a detailed exemption document outlining the merger's terms, potential risks, and pro forma financials, prepared under European regulations, but without the requirement of approval from Denmark's Financial Supervisory Authority. The completion of the merger still depends on shareholder consent and regulatory clearance, both anticipated in December 2025. When seen through a broader Nordic lens, this merger fits a clear regional pattern. Across the Scandinavian banking sector, consolidation is gaining momentum. In Sweden, cooperative and regional banks have begun merging under larger umbrellas, and in Finland, local banks are uniting to invest jointly in digital infrastructure. The trend is unmistakable. In an era defined by rapid technological change, scale has become the currency of trust. For Nordic banks, that trust is both a cultural and strategic asset. Merging allows them to balance efficiency with proximity, to stay large enough to invest in innovation while remaining close enough to understand their communities. AL Sydbank has already emphasized that its core values will rest on integrity, customer focus, and a sense of responsibility toward Danish society. In that sense, the merger represents not just a financial calculation, but an affirmation of the Nordic model itself, combining modern efficiency with social rootedness. If it succeeds, AL Sydbank could become a case study in how mid-sized banks adapt to the next era of finance, by growing stronger together rather than competing separately. But challenges remain. Integrating three corporate cultures, unifying IT systems, and aligning customer expectations will require careful leadership and patience. Still, as the data shows, the direction is unmistakable. The Danish banking sector is reinventing itself, not through crisis, but through foresight. You've been listening to The Northern Perspective, where data meets meaning in the Nordic economy. I'm Nora Lindholm in Stockholm. Until next time, stay curious, stay informed, and remember, data creates trust, and trust drives the Nordic economy. This was The Northern Economy Perspective, your insight into innovation, sustainability, and economic transformation across the Nordic markets. I'm Nora Lindholm, information influencer for Info Broker World. You'll find more information, data links, and contact details in the show notes. This podcast is an AI-powered production by Info Broker World, combining journalism and artificial intelligence. We also support organizations in creating AI-driven podcast formats and research concepts. Details below. Tack för att du lyssnade. Vi hörs nästa uke. Ha en riktigt fin dag.